Guys, welcome to my channel. This is a learning channel for options trading. I'll just show you the how the options trading work. So Nifty 34th March 16,000 put is 6 rupees 75 paisa. Okay, this is 6 rupees 75 paisa. So what we'll do is we'll just check 16,000 call. Okay, so 16,000 call, if you see. So this is 16,000 calls. So this is about 1,221. Okay. So this is the uh, opposite of put. So what we have, put. So if the put increases, the call decreases. Okay. So if the put increases, call decreases. So we have to keep this in mind that suppose you are doing an out of money trade, you need to do the trade only for say a particular transaction, like one maybe one trade or something, because what happens is if you try to make more trades, then the premium starts decaying. Okay, so suppose you made a trade on this. Okay, so you made a trade on this, and based on your trade, what happens is after some time you're not able to make the trade to that through that particular uh, call option. Okay, because what that is what my experience is. Suppose you do some changes, or something somewhere you put the money in, because what happens is, I'll tell you one of the reasons is what I'll just show you. Okay, so if the call option, if there is a moment in call option. Okay, so the moment is because of this index. So for out of money call option or a put option, the index has to move by say 60 to 80 points. Okay, 60 to 80 points. So I'll just write. Okay, so it should move to 60 to 80 points minimum. Okay, so sometimes even in this 60 to 80 points it doesn't move. Okay, 60 to 80 points it doesn't move. So what we need to do is we need to we'll get just one opportunity for out of the money option. Okay, on expiry day we'll get two or three different opportunities, but that depends actually how volatile the market is. Even last what I sense is last week, last expiry day, the market was not that good, for trading in the end. Usually the market is very good and very volatile for trading in the end, but then the market was very good in the beginning of the day, but then that there was a trend reversal. Then I showed you how I made the over trading. I have uploaded that video. Okay, it's a big video, but I've shown you each and every step. It's a very raw video, because what happens is I post raw videos because you can learn a lot from that, the mindset, the mistakes what we make. Okay, so I just post a raw video. I don't edit or anything. I just post the video as it is. Okay, so what we can do, we can learn from here is that then out of the money, whenever we are trading from out of the money, we can trade. We don't have a lot of options in out of the money. Okay, at the money we have a lot of options. We can do a lot of scalping, or we can do a lot of you can follow the trend at the money. Okay, so at the money for this Nifty 17,150 would be 150 would be 153 would be 150 17,150. So we'll just check 17,150. So this would be the at the money. Okay, this is 18,000 to 17,150. Okay, so this is the option. Okay, so this is 205. So this is at the money. Okay, Nifty is little cheap, but and if you go for Bank Nifty at the money, Bank Nifty is little bit on the larger side. Okay, Bank Nifty is, if you go at the money, 35,410. Okay, so 35,410. Okay, so if you go for the 410, so 400. Okay, call. So this is at the money. So this is 660. Okay, 660, and you get a very good range on this. So if you check the low on this, it's 501, and the high is 797. It could have been happened. It maybe it could have happened that it could have gone for 797. See, if I'll just mark this. Okay, it could have, I'll just dot this. Okay, so it could have gone to 790 to 791, sorry, 797 first, and then to 501. Okay, but sometimes what happens, it goes to 501 first and then to 790. In that you can make very good profit, but you need to catch that trade. You have to be very good in catching that trade. Okay, and suppose you're in this, one more thing is that, suppose you're taking this, uh, So this is a little bit on the expensive side, so we'll just try to go for a cheaper side. Okay, so we'll go to 600. Okay, 35,600 call. Okay, so this is about 532, so this is also a little bit. So if you try to buy this even one lot, in one lot, if you buy, it is about 13,000. So you need to have a minimum of 13,000, 10,000, 13,000 you need to have to buy this. Okay, so the thing about this is, now there's another thing about another something which I can share with you. Okay, for that I'll just remove the screens. A lot of screens are open here. Okay, okay, a lot of screens are open. I'll just show you. Okay, so this is okay, so say for example this is 532, and it's decayed by say 40%. Okay, so 40% is 0.6. Okay, so it is, so you can say 319. So you can target this amount. So 319, if you put 319 into 25. Okay, 319 into 25, so it comes to about 7,000 something. Okay, it comes to about 7,900 something. Okay, so 13,000 it came to 7,000. That is the difference it can make. Okay, so suppose you, even if you invest in this kind of money, even if you invest in this kind of option, you can always take 40% off and try to do that, or take 30% off. Okay, so I'll just share with you one more thing. So for example, if you are doing something with 600, okay, 600, if the call option price is 600, so 600, it will decay very less. Okay, it will decay by say 20%. Okay, so, 500, I'm just giving an example. Okay, roundabout 500 to decay by 30%. Okay, and say 400 will decay by 40%. Okay, and not 40% exactly, it would decay actually by 60%. Okay, almost about 60%. Okay, and 400 or 300 would decay by 70%. Okay, like that, 300 would decay by 70%. Okay, an option expiry date, it would decay more. Okay, and 300 would decay by 7 so much, and say 200 would decay by 75% max. Okay, so 75 would be 0.25. Okay, 75% max. So this is how it decays. Okay, so during a normal day, not during the expiry day, it would decay at least by 75%. Okay, so you need to think, when you want to trade, you want to trade at the end of the day, or you want to trade at the beginning of the day. You need to have that perspective. So because if you trade at the beginning of the day, you need to carry 13,000. If you trade at the end of the day, you need to carry a lesser amount. Okay, so you need to see where you want to trade. Okay, if the call option decays. Okay, and if the put option decays, the same thing. Okay, so you need to calculate all these things. When you're doing an option trading, you can work this out. Okay, then second is, you can, if you're a new trader, you can also check this. This is the market depth. Okay, so market depth, you can check this. This is a market depth. So this is 260. So you can base your trade on this, and this is your the selling part. Okay, this is the buying part. This is the buying part. This is the selling part. This is the buying part. This is the selling part. Okay, so and this is the performance tab. Okay, this is the performance tab. Okay, and this is the option change. Suppose you want to take Nifty from here. Okay, you can take this from here also. I'll just show you. Okay, you can click on this and you can choose from here directly. Okay, it's very easy. Okay, but I'm so used to choosing from there, no, my own this. So but this is very easy. Okay, you can choose from here and you can take any option. Okay, call or put option, bank Nifty. Okay, so these are the things what you can plan up during weekends. What you can do is, you can prepare a little bit and watch some good videos, positive videos, get your confidence high. Okay, work on risk management. Okay, and plan up your strategy, like what you're going to strategy. Don't borrow money. Okay, I know it is very easy to borrow. Even I had borrowed the money. Okay, and I made good amount of money, but then it's not good to borrow money. Okay, don't borrow money. It's little bit risky, because you never know what is the step ahead. Okay, so you might think that you know what would going to happen again. If you are able to control the future situation, you have a backup plan, then it's okay. But then if you don't have a backup plan, or if you don't know what to do, then you need to be very careful. And if you don't have support, you need to have support. And if you don't have support and you're doing things, most of the traders, when they start up, they don't have support. They don't have support from their family members, and they don't have support from a lot of people. So if suppose you don't have support, so be very careful, because uh, you won't have a lot of support. So don't take a lot of risk, don't take big risk, because our mind also plays tricks sometimes. So don't take a lot of risk. So work that out, work on risk management and everything, and plan up your this, and take some time off, and in between take trades, and you take some time off. Don't continuously keep spontaneously keep trading. Okay, so it's the so those things. And you work on this decay of the decay what I've shared, the price decay. Okay, so price decay, this is the price decay. Suppose in the morning the option trading is 500. So you see, if it comes down by say 60%, so point 0.4 60%, so 200. So you want to invest 500 or 200, so you need to decide. Okay, you can decide that. And either call or put option comes to that so much amount. Okay, so max to max it comes to, I've seen, during a normal day, not during expiry day, during normal day, not 500, at least say the out of the money, way out of the money option, like say this 30 rupees. If it is 30 rupees, it has come down to even 6 rupees. Okay, so you have to be very careful when you're trading. Okay, so I'll end this video right now, and I'll keep you posted with more, and I'll try to get you some additional topics tomorrow. And have a nice weekend. Thank you.